Okay guys, I'm going to kind of show you some variance between MT5 and a web trader and how you might get confused with price. So throw the intro, I'll fire the screen up and we'll get into it. Okay guys, warm welcome to one and all. Let me get my coffee, because we all know Scruffy likes a coffee. And we'll fire the screen up. Now, this is for you, Lee. So a little salute to you, kid. I understand where you're getting from, and it's all about terminology, because you've got points, pips, ticks, pips, you name it. And different platforms call them different things. They also have different movements for each. So 10 points on here might equal 100 points on, say, an MT5. And then you can look at trading view, and that might be different again. I don't like trading view. In fact, I can't stand it. Don't like it, don't use it. So we'll start with this. This is a web trader. And web trader, as you can see, if you're on a pounder point here, all right, so just kind of pull that down here so it doesn't trigger. Pounder point, or really what it should be is pound per movement, and you want 10 quid, you drag it up 10, and you get 10. About as simple as it gets, all right? So pound in, movement to 10, job simple. This is about as easy a platform as you're going to have, okay? The problem arises when you're looking at the same product. So we're looking at cable, and then you put it into, say, black bull. So if I pull black bull up, principle's the same. So here we have a volume of 1, which I'll show you in a minute, and a take profit, okay? So there's your volume or 1, which is rule of thumb about a pound. And then if I drag this down, you'll see if I did say 10 points on this, it actually only gives you about 80 pence. To get 10 pounds, I need to drag it up here, and it's 131 pips, or points as these call it. So from there to there. See, it's like 130 to get your tenner. So my advice is don't get yourself hung up on price movements in the terms of, oh, it's moving 10 points or it's moving 20 pips or whatever. A lot of the time, all you really need to know is I'm getting in here and I'm going to get out at the next cluster, which might be here. Okay. So all you would do is I'm getting in there, drag your target in, because you can do it all with drag and drop. Show you how to do that in a moment. And you think, right, well, that's the move. How much am I getting paid? Well, in this case, you're moving 153 points and you're going to get about 11 quid. Happy days. How do I increase that? You increase the volume. Very, very simple process. Now from here, you can then go, well, what's my risk? Well, your risk is that way. So open this up. Drop that into there. Open it up. Put your stops in. Say 300 points just to modify it, just so you can see it. And then again, you can drag and drop your stop loss as well. So in this scenario, you can then work it out to see if it's worth it. Well, if it's going up there, I'm getting 157 to get me about 11 quid. But realistically, I want my stop just underneath the swing point, which is 97. So yes, I've got less on the table to gain more. Very simple. Time the market, wallop in, hardly looks back. But instead of looking at, oh, well, my stop is X amount of pips away, X amount of points away, you're now looking at the body of the market and the structure of the market. You're dragging and dropping, and then you're just seeing how much it is. Now for this, so you're putting 7 quid on the table to get 11, 12 quid off the table by targeting into there. Obviously, if you don't think it's right, don't take the trade or adjust the trade. You know, stop has to be where it is. If you don't think the target's good enough, maybe move the target up to there, but look to start taking money in and around this area. Further it gets up, the better it is. That's the easiest way to do it. All right. Eliminate the sort of mathematics side of it, of, oh, I need to do this to get that and all that other. No. Just look where you want to get in. Look where you're looking to get out, whether it's for your target and your stop, and then see what the monetary return is. If you don't think it's very good, up your position size. If you think it's too much, drop your position size. But what you're essentially doing is working in money. So I hope that helps. Catch you in a bit. See you soon.